Tonight, a warning from Goldman Sachs. Chief stock strategist David Kostin predicting the S&P 500 will fizzle out by year's end with virtually zero gains. And his forecast for the next decade, not so great either. So what should you be doing? We're asking Rick Edelman, chairman and CEO of Edelman Financial Services. Rick, I know you're not a big mover in and out of stocks on forecasts. What do you make of what Goldman Sachs is saying tonight?
Well, on the one hand, Gerri, I think it's a lot of financial noise. Ask 10 analysts, you'll get 11 different answers. I'm not sure any of us should make any decision based on it. But at the same time, it does reinforce the importance of diversification. You shouldn't be making any investment decision based on what any single analyst says. But you should also pay attention to the fact that they're saying stocks aren't going to be, in their view, all that exciting in the future. That just argues, as far as I'm concerned, maintaining a long-term focus, not just for the next 12 months, and maintaining a broadly diversified portfolio. Right. That will get you through, Jen, near anything.
Rick, answer me this, because I think the experience of the last market sell-off in 2008, a lot of people out there, they were close to retirement. No, they didn't have their entire portfolio necessarily in stocks, but they had a decent slug of it in stocks, and they got hammered. So people close to retirement, should they be doing something different than somebody who's 25?
No, because if you're close to retirement, you're still very far away from dying. If you're in your 50s or even early 60s, you've got a 30-year life expectancy. If you're married, one of the two of you can be expected to live probably to age 95 or 100. So the fact that you're in or near retirement, that doesn't really sway me very much. You still need to maintain a highly diversified portfolio. The real key is to make sure that you are adjusting your life expectancy for your income needs so that you aren't going to go broke before you die. And that's why a good financial plan is of vital importance for people who are in pre-retirement or early retirement stages.
So I'm investing my life expectancy, or I'm investing my retirement plan? I'm changing my retirement plan for my life expectancy, right? You said it the opposite
absolutely.
way. It really
and
confused
assume
me.
You're going to live a lot longer than you otherwise would have thought.
I want to talk for a second, though, about these robo-advisors out there. They're becoming more and more popular. Betterment, other companies. There's a lot of venture capital going to companies that do this. And essentially, we're talking about computerized portfolios because of the power of computers these days. You can essentially easily come up with a diversified portfolio for folks. And that's what these services do. There's not a lot of hand-holding, but if you want to pay a quarter point, 25 basis points for a little assist, you can get it. What do you make of these?
Well, I think that they're a threat to traditional brokers and many investment advisors as well, whose only value proposition is price and performance. I mean, brokers who traditionally say, I'll get you stocks cheaper or I'll make more money for you than the next guy, those guys are out of business because, as the robo-advisors are demonstrating, as you've just said, they're going to build a highly diversified, globally based portfolio, as good as anyone else, and they're going to do it really cheap. That means the financial advisor has to offer something else as a key value proposition. In our firm, for example, our clients are getting a huge amount of personalized service. They're getting a broad array of advice on virtually every aspect of their personal finances, not just the investments, something the robo-advisors can't do. If you're in a panic in 2008, you're going to call your robo-advisor? They don't have a phone number. They don't have financial planners on staff to be able to help you. So if you need a broad array of services, then you need a financial planner. If all you want is a portfolio, cheap, yeah, sure, go to a robo-advisor. You get what you pay for. It's that simple.
Seems to me that this makes a lot of sense for people who are young and maybe they're just beginning to put this portfolio together and they don't want to pay a lot for advice. I mean, let's face it, when you're 25, you're 30, maybe even 35, you're just socking the money away. And possibly you don't have a lot of other financial obligations out there. Might make sense for folks like that.
Yeah, I won't disagree with that at all, Gerri. We have our online service on the same basis. We have Edelman Online for our clients and other consumers who want our investment management without having to have access to a human being. They can do it 24/7. It's easy. They have access to an advisor whenever they want in our firm, which people really enjoy. But you're absolutely right. If your needs are simple, you just want effective investment management at a low cost, it's available to you. And as your needs change and grow, then that's when you're going to want to go to a full-service financial planner.
Rick Edelman, thanks for your time today.
Thanks, Gerri.